and we have with us a research specialist in financial and capital markets. I'd like to introduce Dimantha Mathew. Dimantha, welcome, Happy New Year. Wonderful to have you here in our studios. But we heard the central bank governor say before the sacking, after the sacking, there have been certain developments in Sri Lanka, but specifically financial and capital markets. If we talk about that, what is certainly the outlook for Sri Lanka?
Yeah, so Happy New Year to everyone. If you look at the financial and capital markets, I don't think the uncertainty that was created over the last 3-4 months, I don't think it's going to get unfolded immediately.
Right.
So because
why do you say that?
Because now if you seriously look at it, now the rate hikes in the Federal Reserve is likely to continue, obviously with certain delays with the growth factor and so on. But if you look at our reserves position, it's pretty low now. We've come below, according to the governor, we've come below the 7 billion mark also.
But the government says it's manageable.
Yeah, but if you really look at it now, 4 months of imports, we roughly have about $2 billion of imports a month. So roughly about $8 billion of imports is where Sri Lanka would be comfortable with, and that's what we had before September situation.
Right.
But then with the rollovers of the loans not happening properly and probably some delays in the China Development Bank loan coming, so our reserves actually fell below the 8 billion mark, and now it's falling below the 7 billion mark. Because now what happens is with this political crisis that got created, the loans that were supposed to roll over, and we were going to go into the capital markets and raise more funding, because we have a maturity in January which is $1 billion we have to pay out, and that is also happening. So with those things on the cards, so reserves are likely to go down even further, and the rollovers are getting delayed. Yes, obviously we can renegotiate and come back, but that's going to affect the exchange rate and foreign investors' confidence.
Now, the rupee fell to a record low today, and it seems that the dollar may weaken this year. That's what foreign exchange strategists overseas predict. But what is your view on the Sri Lankan rupee per se? Because we saw the rupee falling some 19% last year, but again, a lot of foreign outflows, and we did mention about policy uncertainty. We saw some ad hoc measures taken during the last year, throughout the year, be it the interim government, the government before the sacking or after the sacking. We did see a lot of uncertainty. But going forward, is this a period that we can actually resurrect the economy and change the damage, come back from the damage that was caused?
So even this year, it's likely to be slightly similar to last year. Obviously, I'm not saying that they are going to have around 18% depreciation, but our Sri Lanka's average depreciation is likely to be around 4% usually. We are anyway a net importer, so obviously the rupee tends to depreciate. But we as First Capital Research target slightly above the average amount, which is about 6% for 2019. That is also because the rate hikes in the Federal Reserve and the fund flow towards the US is going to continue at least during the first half of the year. Obviously, it's going to slow down with the US slowing down, but this is going to weaken the Sri Lankan rupee, especially in the first half. Even more. So we'll have more accelerated depreciation probably in this first half of the year, and probably then slowing down, and also once we get our act together and our reserves start building up again, then only there will be some confidence levels in the